Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. All right, let's go to a company that I really like, Axon.
Don't you love it when a company beats earnings and then raises guidance? Don't you love that?
Is that what they did here?
Revenue up 34%. I'm pretty sure that was better than expectations. They raised guidance. Buddy.
Yeah. So let's see. Revenue $312 million, up 34%. This is every time I look at their earnings report, it's right in this range, right? It's like kind of low 30s. That's just. But do the math on how quickly you grow if you grow 30% a year, and you become a really big company really quickly. Gross margin improved 100 basis points. That's encouraging to 62%. Gross profit was up. And then here's the big thing here. This is not a company that you're going to value based on a price to earnings ratio. You're still in growth phase, but they are now profitable. So we're not, and they've kind of bounced around that profitable number over the last few years. So I wouldn't necessarily say that, they're always going to be profitable, but as long as that top line number is growing, at 30%, that's pretty good right there. I was going to go zero debt, $371 million in cash. Is that good, Jason?
That is good. That is good, especially when it's a company that's also cash flow positive.
Yeah. Sales, Tasers, always a surprisingly solid business. This is really where they started, was making Tasers, over 60% margin on hardware.
Well, that was the name for the company's first 15 years, Taser International.
Yeah. Until software and sensors, which includes body cameras.
Right, their Axon body camera, right?
Yeah, so and then they've got cloud. Cloud is the SaaS piece of the business. Software is the surface piece of the business. So what they do here is sensors and other you can think of that basically primarily as body cameras. Right. And then Axon Cloud is the services that go along with those body cameras. So a law enforcement agency will sign a deal for 5, sometimes even 10 years to take that data that's coming off of your body camera and put it on the cloud so that it can now be shared with, people in the prosecutor's office or wherever that needs to go. So that's the business that over time you look at Axon and you say, hey, a 74% gross margin business, if that's growing like crazy, then this is doing really well. Well, look at this. Axon Cloud up 51% year over year, 17.2% quarter over quarter to $95.7 million and a gross margin of 74.1%. That's pretty good.
I kind of hate it when people do what I'm about to do, but I'm going to do it anyway. This is kind of their AWS, right?
By the way, they moved off of AWS.
That's right. It did live on AWS.
Yep.
But that's kind of that same thing for them. It's a highly scalable, very high margin. But I think customers it's going to be far stickier. It's going to be more like a CrowdStrike or something like that. That's just so critically important. So you think about for law enforcement, it drives down costs. It helps them keep police officers on the beat in the communities they police instead of filling out paperwork or waiting in court. It drives down court costs because when there's video evidence that something did occur or something did not occur, it tends to get resolved much faster, right? Instead of relying on personal accounts. So they save people's life, right? The company was founded because the founder and CEO, like a close friend, died as a result of gun violence. And so they started this business to save lives, right? And that's the mission. So
mission-driven business, and it's really easy to understand. I mean, this is I think underappreciated in the market, is a business that is so easy to understand that a CEO can put it on a few slides, and then that trickles down to every single one of the employees knows what their role is in that organization. Investors know what's going on. Salespeople know what's going on. They're just executing so well on what they do. The piece that I don't see any mention of it yet, although I haven't gone through the entire report, is if this is going to take the next leg up and continue the run that it's been on for the last 5 to 10 years, it's going to be because they're focusing now on consumer devices, so consumer tasers, and then I would be shocked if they don't eventually move into like home security type systems. I mean, they have the cloud infrastructure there, right? You know,
Yeah.
if I can literally tie into my local police department and say, hey, somebody broke into my house and here's the video, it happened 3 minutes ago. Like that is incredibly valuable. They're the one company that kind of has the infrastructure to be able to do that. Now, I don't know if they're going to be able to pull that off.
Yeah.
That's a bigger lift than being a law enforcement focused company. Being a consumer company is very, very different. But they've got the products that they can kind of repackage. If you've seen the packaging of their consumer taser device, you know, it looks a little bit more, I don't know, friendly is the wrong word, but you know, more consumer friendly than a typical taser, and yet is
not as
from
aggressive.
a gun.
That's way to describe it. Yeah,
that's the kind of device that, you know, I don't have a weapon for protection, but that's the kind of thing that if I was ever going to, that would be appealing to me. So I can see where that market could potentially go. I don't know if they're going to get there, but that's sort of the next, you know, double of their potential market size. So
did you show the cash flows?
I did not. Let me get to that.
Let me do that real quick here. So again, $41 million in positive operating cash flow. A lot of the companies we tend to talk about this time of the quarter don't have positive cash flow. Free cash flow of $26 million. I'm just going to ignore this adjusted free cash flow because what they do is they take, so free cash flow defined as operating cash flow minus CapEx and purchases of intangible assets. So basically, you know, so I like that. That's a good description. But you can't just exclude campus investments, which means it's money you're spending on your. No. I'm sorry, I'm not going to let that one fly. So we're just going to ignore that one and pretend it doesn't exist. But the point is, this is a free cash generating business, and they'll have an updated presentation out, and I encourage people to look at it, Travis, because it'll show that TAM that has like the consumer part and on top of the law enforcement and the courts and the legal industry and like all of these little pieces of the pie that they do. And the thing is, like you were talking about, not knowing if they can break into that consumer market and offset the sale of things like handguns. The thing is that their share of the addressable market that they're doing business with now, like the SaaS stuff and the sensors and the taser devices, it's such a small number against just those buckets where we know they can execute. They don't have to do that other stuff to be a great investment. I think that's really, really important.
Another number that I always look at from them, annual recurring revenue grew 40% to $403 million. But here's the big one. Future contracted revenue. Now, this is contracts with primarily local law enforcement agencies. Now, you know, some bigger ones, state and national as well. $3.73 billion to be recognized over the next 10 years. This is a company that is signing contracts for as long as 10 years. So it's going to keep growing unless you think that we're going to stop using body cameras or there's another company that's going to come in and make a better body camera, which, you know, companies have tried. It's almost like its own mini monopoly.
Yeah, they're a trusted partner with law enforcement right now. They're leveraging that. Great business. I can't explain, Travis, why I still have not bought shares of this wonderful company. Probably because I get really aggravated when I look at their stock-based compensation. That's like the one thing that consistently drives me crazy.
Because they did, is it Mike Smith? Is that the CEO's name?
Yeah,
Founder and CEO.
Right. Yep.
Yeah. Just a quick aside. He sold most of his shares back in the day, more than a decade ago. And when Elon Musk came out with the, hey, if I hit these massive growth targets, I want a $20 billion stock compensation plan. And so they did a Axon version of that not only Mike Smith got, but they also offered it to employees. So yeah, balance that is part of your investment thesis.
There you go.